All right, everybody. Good morning, good morning, good morning. Happy Monday. Hope you had a great weekend. We're having some internet gremlins on our end today, but we must power through. The show must go on. So we are here. Spencer Israel, JC Parets. Very excited for today's show. We are going to be joined by Sam Rowe, runs the great research blog TKer. He'll be on the show at 9 o'clock Eastern Time. Kimmy Sokoloff, as always, at 9:15. We have charts, we have ideas, and we have you, everyone in the chat. Justin, Jason, Ken K, Joe, Wavy, Dan, Yusul 1, Mitchell, to name a few. Good morning, good morning, good morning. We're already running late. Let's start this damn show already. JC.
What is happening, my man? How's the weekend?
I hear you loud and clear. I see you somewhat clear, but that's okay. That's okay. My weekend was, I was telling Alfonso, my weekend was fine. It was perfectly average. It was freaking hot, man. And we also got pounded with rain last night. Some serious flooding over here.
I think part of the internet problem we're having. I think we got bombarded with rain and wind yesterday, and I think we're having some local issues. Local issues. Spencer. It happens.
It happens. If you do want to turn your camera off, I can always throw on my fancy, JC on the phone graphic.
Oh, that's fancy. That's fancy.
Right? Or what makes more sense is to probably just do that, right? On the phone, JC Parets. And we have charts, though, so don't worry. Won't be looking at my face the whole damn time. Okay. What's on your radar today? Should we do some state of the markets?
Let's do it.
All right.
All right. So I think the chart that we should look at is the old school Dow theory. This is a big one for me. Are you guys able to hear me okay? All good?
Oh, yeah, we're here. Great.
All right, fantastic. So here's the story. So back in the late 1800s, Charles Henry Dow was a journalist in Springfield, Massachusetts, and he decided that he needed to write about the economy. He needed to write about the stock market. And, he'd go door to door asking businesses questions about their business. They're like, no, Charlie, our business is none of your business. So Charlie's like, all right, well, what am I going to do? So he created a basket of stocks that make the goods, right? And he called those the industrial stocks. And then he created the companies that deliver those goods. And they were the railroad stocks, right? Back then, all we had were railroads in the late 1800s. It was before automobiles and airplanes and things like that. So he's like, all right, well, if the companies that are making the goods and the companies that are delivering those goods are both going up, then the economy is probably good. Stock market's in an uptrend. They're both going down. That's evidence in and of itself that things are bad and things getting worse. And if one's going up and the other's going down, there's somewhat of a divergence, and it's a heads up that things might be changing, right? So that was sort of Dow's theory, if you will. And ultimately, once we got automobiles and airplanes and things of that nature, that index went from the railroad index to the transportation index. Ultimately, it was named the Dow Jones Index. He didn't name it that. That was named, 40 years later or so. But these days, do we really deliver our goods and services using railroads or airplanes or automobiles? No. Our goods and services are delivered over the internet, right? Using semiconductors. So that's exactly what's going on here. Dow Jones Transportation Average is the old school Dow theory. And the semiconductors is the new school Dow theory, right? So we include both. And both of them are making new 52-week highs, by the way. New 52-week highs for the old school Dow theory and new 52-week highs for the new school Dow theory. So the question is the Dow Jones Industrial Average now going to make new 52-week highs as well? And I think it is. An interesting stat came out from Bloomberg over the weekend. After the greatest start to the NASDAQ in history, right? Greatest first half to a year in the history of the NASDAQ. The sell-side analysts respond with their most bearish second half outlook on record. And, they totally swung and missed in the first half. Got it.
I don't know. I kind of respect it.
Respect what?
The outlandish call, right? I mean,
Well, here's the thing, right? They completely missed the first
right.
half. Again, greatest start to the Nasdaq in the history of the stock market. And the way I learned it from Paul Tudor Jones is that only losers average down. That's precisely what we're seeing here, right? They're not being in my opinion, they're not so much sticky and so much showing quote unquote conviction. It's more like they're stuck, right? They got it so wrong, and they're so not even close to reality that if they come now and they change their minds and then the market does roll over, they really embarrass themselves even more than they already have. So it's a situation of career risk, right? There's a situation of herding mentality. All of these things are playing a role in this. And, I think it just continues to point to the fact that Wall Street is mispositioned. They came into the year instead of covering their shorts last year as the market declined, they were adding to their shorts in growth stocks and tech stocks as the year ended, and they got absolutely squeezed in the first half. We see speculators in the futures market with huge net short positions. These are the hedge funds that are completely on the opposite side of the trend of the market. And with the sell side continuing to remain very, very bearish, I don't think that's a bad thing for the market. I don't think that's a bad thing at all, Spencer.
Look, what the chart that we're looking at here is just showing S&P 500 price targets, which is one thing. I think, with regards to strategists changing their mind or digging a deeper hole or not, I think it's worth noting and giving a tip of the hat to all the economists out there that have changed their mind and said, "Oh, okay, the data is showing maybe not a recession this year. If it is, it'll be mild, maybe next year." But a lot of the economists have reacted to the data and have sort of said, "Okay, you know." We're calling for a surefire recession this year. That's not looking as likely now. So, some aspects of some parts of the street have, changed their mind with the data. These the macro or the head of the global equity desks that are making these S&P 500 price target calls is just one small aspect of the predictions
Yeah, but it tells the whole story of the mispositioning on Wall Street in general, right? It's not just the sell side that got it completely wrong and is on a completely opposite end of the trend of the market. You're seeing it in the positioning too, right? It's not just Wall Street sell side. You're seeing it in the hedge fund positioning across the board. And here's another area that I think is people are very mispositioned, and that's in small caps. You see, last year in 2022, in the back half of last year, remember this bull market started in June of last year. So we're over a year into this already. In June last year, when the new 52-week lows list peaked, right? That was when we got the initial strength off the lows in the more value-oriented areas. Interest rates were still going up. The types of stocks that do well when rates are going up were doing well. It was not growth. It was not technology, right? That wasn't the case at all. And I remember because we were pounding the table bullish, we were buying stocks, obviously, because we were in the camp that we were already in a bull market, and that those decisions obviously paid very handsomely. But nevertheless, the arguments that I was hearing, and people were very angry that we were buying stocks last year. I don't know why they care so much that we were last. What they JC, nobody cares oil and gas stocks. Nobody cares about industrials. People trade growth, JC. People trade tech stocks, JC. I'm like, all right, but everything else is working except for those things, right? This was in the back half of last year. Literally everything except stocks. So they were telling me this is not a bull market.
Oh, we lost him there. Let's get him back.
Are we back?
Yep, you're back.
Okay, so this year it's been the exact opposite. Now they're complaining that these growth stocks and these tech stocks are working too well. Oh, they're doing too well now, JC. Last year, it was that they weren't working at all, so it wasn't a bull market. Now they're doing too well, so it can't be a bull market. It's like, wait, what? Right? So what I'm seeing now, small caps outperforming in the back half of last year. Now this year, as those mega cap tech stocks have outperformed, what are we seeing? We are seeing small caps underperforming. Well, what happens if small caps now begin to outperform again? Because this is the ratio of the Russell 2000 small caps relative to the Russell 1000 large cap index, right? So small caps versus large caps. And as you can tell, we're back down to the levels where this ratio bottomed in 2020. So if there was ever a time where small caps were going to start to outperform once again, this would be a logical area. Spencer, what are these perma bears going to tell me and get mad at me about if the small caps start to outperform once again? What are they going to say?
Oh, there's always a wait, what? No, there's always an argument to be made for doom and gloom. Come on, uh, pick your economic indicator of choice, right?
It's not a quality rally if it's led by small caps, JC, right? Right?
No.
So hold on. So then not only are we back down to the exact levels where small caps started to outperform back in 2020, but I zoomed in where you can take a look at momentum and what you're seeing with lower lows in the price of this ratio. You're seeing higher lows in momentum. We're seeing a bullish momentum divergence. So again, a lot of things pointing to potential reversion here in small cap strength. And as you guys know, we're already long small caps very aggressively. So since May, if you look at the 2000 chart, loot basis, we were buying a couple of months ago because we were back down to those summers. That was former resistance in 2018 and 2020. So, our polarity principles teach us that former resistance turn into support. And that's exactly what we've seen. The buyers continue to come in at this price, and we're long. So we're in.
Oh, lost him again. Wow.
I think they're, because of the big storm that we had yesterday. I think they're working on it.
They're working on it.
Yeah.
Yeah. I don't know about you, but we had some like hardcore flooding.
It was bad.
Yeah, it was bad. Wait. So okay. So small caps are one thing. I think with regard to tech, it's sort of a damned if you do, damned if you don't, because if tech is rallying, it's probably leading, right? Because that's what tech does when it goes up, and you can say, "Oh,
it doesn't have to be a leader. It could be going up and still be laggard."
True, that's true. But if it is leading, you can say, "Oh, this is all multiple expansions, not supported by the earnings. This has to come back down." And if tech is lagging, you can say, "Oh, we can't go up without tech. We need tech. It's the growth. It's the future." So you're sort of damned either way.
Sector rotation is the lifeblood of any bull market. The fact that tech and were the underperformers in the back half of last year to the point where they were the only things not performing in the half of last year, and then rotation into them coming into the year, perfectly normal for a bull market. You see, Spencer, in bear markets, the leaders catch down to the laggards, right? That's what happens. In bull markets, the laggards catch up to the leaders. So we could talk about we talk about $1 trillion. What that means, monster stimulus. You could tell fairy tales about all kinds of things all day long, and those are the things that maybe should be happening, maybe could be happening. We should be in a recession. We could be in a bear market. Yeah, all those things might happen. Like we might have like a currency crisis. All of those things could very well happen. I have no idea. But what's actually happening, like where we us mere mortals are forced to live in the world that we actually live in. A lot of stocks are making new 52-week highs. In fact, we've got the most of new 52-week highs in over 52 weeks, right? So in other words, new 52-week highs in the number of new 52-week highs, right? So that's what's actually happening. And what I've noticed over the years is that many people like to live their lives and make decisions based on the
Yeah, we're good.
Right? So they make decisions on they think the world should. This is the way things should be. So we're going to make decisions based on that instead of making decisions based on the way the world actually works, right? Like, people should not be trading, JC. People should just hire a financial advisor. It's like, well, maybe some people, but most people don't, and most people are trading. So you could live, you can make your decisions based on the way the world you think should work or the way it is. Oh, JC, this is going to be the worst bear market in history because we've never had so much stimulus and the Fed and blah, blah, blah. Yeah, maybe. right? That could happen, I guess. Why don't we just wait for that to happen, right? Like there's going to be a time where we can short everything, and it's going to be in a narrow market, and like going
Oh,
to be great.
I'm so glad you mentioned this. Here's an article in the Wall Street Journal this morning. 5 ways the new bull market makes investors nervous.
Hilarious, right? We've been in a bull market for over a year, so there's nothing new about it, right?
First 6 months, 20% rally, yada yada yada. Yet investors say they can't stop looking over their shoulders.
I mean, listen, that makes perfect sense. When you go back and you study the early stages of bull markets in the past, there's that, that disbelief, the recency bias of, we just had a bear market, there's going to be another dip, double dip recession or whatever it is. Like people are just always thinking about what just happened. And I like to look at it differently. Like people are looking for a market, for a bear market. We just got one, right? Got a nasty bear market. Like now you want another one? Like we literally just got one. So people are like, oh, there's so much bad news. Like, yeah, why do you think we had that bear market? Because the market is a forward-looking discounting mechanism. So, if bad news has been coming out or whatever it is, the market was already pricing that in. That's what the market does. So instead of looking at lagging information like arbitrary things like the economy or earnings or things of that nature, right? Forward looking, right? So it's on that instead, right?
And therein lies the rub, is that the market might be forward looking, but people are backward looking. We're always trying to fight the last war, right? So therein lies the contradiction of markets right there.
Yeah, it's a beautiful thing because you're taking advantage and you're exploiting human flaws for our own profit. I mean, that's what we're doing. We are as investors, it's probably, I would say, just as important, I would argue even more important, to understand human psychology than it is the fundamentals of the company that you're trying to buy. Like that doesn't matter. It's about the positioning and the overall environment. The positioning of the market and the overall environment is going to have much greater impact on the direction of the price of the stock than whatever news is coming out on that stock or whatever that company itself is doing. Right? There's larger forces at work, and I think that's a really, really important point. We got Sam Rowe in the house. I'm really looking forward to Sam. Talk about OGs. We had Eddie Elfenbein last week. OG for sure. I put Sam Rowe in a similar camp. Been around for a long time, known Sam for quite some time. Very experienced. Worked at Yahoo Finance for a long time. Was a business insider. Now he's doing his own thing. Before we get to Sam, I've got some interesting questions. I want to ask Sam, before I forget, Spencer, I want to ask Sam about the new Facebook threads or whatever. I want to hear his thoughts on that.
Oh, yeah.
He's probably got some pretty good perspective because, like I said, he's been around the block. But before we get into that, I want to update everybody on what's going on. We've got some developments, even for Spencer. Yeah. Spencer's like, wait, Riley's going? You want to play the bumper and let everybody know what we're doing?
Yeah, sure. Some things happen.
Bumper or the trailer? Bumper or the trailer?
Let's play the.
Play the trailer. Give him the trailer, Spencer. Give him the trailer. Let him know what's going on.
Give him the full trailer.
Give him the full. I want people to understand what the Asia right now.
All right, here we go.
Do it.
The following presentation was brought to you by Centerpoint.
Hey, I'm John Carlo, the director of video content here at All Star Charts.
Brokerage accounts. Oh, shit, Carlo.
We're good.
I've been with the team for a while now, and we've gone on some pretty crazy adventures. From starting a wine business in Napa, California with our friend Kyle. Next time you're up in Calistoga, find Kyle and tell him I said hey. To the streets of India to meet with mentors and friends before speaking at a giant symposium full of stock traders and analysts. To searching for Japanese candlesticks in Tokyo.
If you were a Japanese candlestick, where would it be?
We went all over town. We went to the fish market looking for Japanese candlesticks. They had no idea what we were talking about.
Yeah, candlesticks. You know I can find candlesticks?
Candlesticks? Japanese candlesticks?
Which led us to politely being kicked out of the Tokyo Stock Exchange.
Staff only? Okay. Okay, do you know where the candlesticks are? No? All right.
And now, I'm here to let you know about our latest web series, Wall Street to All Streets, a global trading adventure. We plan on sending our all-star options trader, Sean McLaughlin,
I'm the chief option strategist at All Star Charts. You know that. That's why you're here.
and our rockstar director of research, Steve Strazza,
We're out here trying to gauge the animal spirits with the stock market at new all-time highs today. Excuse me, sir. Sir, you mind if we ask you a few questions about the stock market? No? He's definitely not buying these new highs.
on a fish-out-of-water adventure around the world, where they will meet with trading legends, the best traders in the world, to learn directly from them on how they approach life as a trader, how they trade, what they trade, which markets they trade, and of course, local customs. I mean, this is a travel show, right? JC Parets will be cooking up fun challenges and tasks for our adventures from his trade desk back in the States. Is Strazza ready to drink snake wine in Vietnam? You bet he is. Is Sean ready to do improv comedy in a language he doesn't even speak? Oui. Join us for our adventures, and we'll see you on another continent. Wall Street to all streets.
So, I just dropped a link in the chat. I pinned it to the chat right there on YouTube. The link, the URL, if you are not in the chat, is where is my page? It's Wall Street to All Streets. I'm
Yeah, that's right.
there.
Wall Street to all streets.
Yeah, okay. There you go. WallStreetToAllStreets.com. Right. Okay. So that link, if you go there, there's a couple fields there to sign up, enter your email and your name. If you do that, you will get a few things, but the two things that I'm most excited about are access to exclusive behind the scenes footage of the trip, because the documentary is going to be made and going to be available to the public, but we are saving some bonus stuff from behind the scenes. You will get the ability to watch the documentary first before everybody else. Okay, that's the second thing. And the third thing is we're going to be having watch parties where Strazza and Sean and Giancarlo are going to be watching, in a sense, the episodes live. You're going to get invited to hang out with them and do these watch parties and hang out and watch and ask questions and all that stuff. So if you go to the link on the screen or in the chat, wallstreets.allstreets.com, sign up, and you will basically get the full Wall Streets to All Streets experience. It's going to be freaking awesome. The guys are already in stop number, 2 or 3? I think 2, right? And they're going to 3 today or tomorrow. I don't know. The days are all mixed up because they're way ahead of us. But that's generally what's happening. So, JC, how'd I do?
You're currently at the Asia right now at the stock exchange in Kuala Lumpur as we speak, giving a presentation at the exchange. That's, there's some interesting memorabilia that they have there. Some of the guys were sending me pictures. Gene Gauthier, our second cameraman, was not able to make it, was having passport issues. It was like a whole thing. So we sent Riley. Riley is on his way to Ho Chi Minh as we speak. Riley has never left the country, has never left the United States. He's on a flight right now to Ho Chi Minh as we speak to meet the team what would be, I guess it would be tomorrow, technically, tomorrow evening. So tomorrow morning, our time here in America on the East Coast, Riley will be arriving in Vietnam to meet with and show to keep it going. But so far, so good, man. These guys are having a blast. They were bungee jumping in Singapore.
Oh my god, guys! The bungee jumping video is going to make the final cut. It's freaking hilarious. I don't want to show it to you because we got to save some magic for the actual doc. But I will later on in the week show you guys some pictures. And if you follow Steve Strazza or Sean McLaughlin on Twitter, you've no doubt seen a few already. We'll share a few on the show later on in the week. But these guys are, fair to say, are having the time of their lives, I think, over there. I'm very jealous.
Certainly looks that way. Let's get Sam Rowe in the house. Not much happening in the market. Dow's flat, S&P's flat, NASDAQ's flat. Bonds are down a little bit with higher rates. Some pressure on gold and silver.
Yep.
Morning, markets relatively flat. That's what's happening. So let's bring on Sam.
All right, Sam Rowe, editor of the great TKer I guess I'm not sure what blog, newsletter. Let's find out what Sam calls it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What up, Sam?
What's up, Sam?
What's up, guys?
So what is TKer? Or what do you call it? How do you refer to it?
I refer to it as a newsletter, but
Okay.
depending on how the reader is consuming it, it's either a blog or a newsletter. You can go to TKer.com. That's TKer.co, and it looks like a blog. But if you sign up for the newsletter, it's a newsletter.
It's both. Okay,
Sam
JC.
Blog sometimes, Sam. Be at Business Insider. Is that where you got your start at BI, or were you somewhere before that?
Actually, yeah, my start got. I think I met you first for the first time, JC, when I was at BI, like maybe 10 or 12 years ago.
Yeah.
But before that, I was actually with Forbes Newsletters division, where I was actually doing research. I was researching stocks for 2 investment newsletters over there. So that's when I, sort of got into fundamental analysis and went through the CFA program and all that stuff. It was doing research for stocks. I was doing that for about 5 years, and then, the financial crisis hits. Business media shrinks for a little while. I got laid off, and then in 2011, I joined Business Insider to build out their markets team.
Yeah, we've always had a lot of respect for you, Sam. Not a lot of journalists out there with a CFA that actually understand markets and things like that. So from you, it's not, it's never been kind of like a hearsay, playing telephone, with, trying to, a young journalist out of school trying to interpret what a hedge fund manager is even saying. And, you've always done a really good job because you understand the way the markets work. So I've always kudos to you, for kind of standing out in that respect. I'm glad that you're here. Before we get into some of the markets, I'm really curious because you've had, a lot of experience sort of in social, you're friends with a lot of people, in social media and things like that, and Twitter and all that stuff. So what are your thoughts on the Instagram threads or whatever? Is this for real? Is everybody moving over? Is this just like, IGTV thing that maybe lasts for a few weeks and then disappears quietly? Like, how do you think this is going to play out?
That's a good question. I think. Wait, can you still hear me? I think one of my earbuds just went out.
Yeah, loud and clear.
Good?
We got you.
Okay, great. Yeah, at this point, obviously we're less than a week into it. I can tell you that the user experience is not great, and there's all kinds of things that are wrong with it. I mean, with any, there's all this initial excitement that you're hearing about from, especially people in media, but a lot of that just seems to be driven by the fact that people are looking for an alternative to Twitter. But at the end of the day, in order for a social media platform to work, it has to be easy to use, and it has to be easy to consume whatever the heck is on it. And right now, you can only get it on mobile. And if you're guys like us who like to upload a lot of charts and have those big discussions based off of visuals, it's not a pleasant experience yet. So unless they start introducing things that are comparable to like a TweetDeck or some sort of a desktop experience, or maybe they figure out a way to make the app on the mobile app really easy to use. I don't know. I mean, we'll have to see.
Come on, Sam, give it to me. A year from now, is it going to exist or not? Jesus, stop hedging yourself.
You know what? Honestly, a year from now, if I were to bet, I don't think it's going to last. I think that the way, if you look at like sort of the history with how Facebook worked, and even with Instagram never had like a really great desktop experience, and this thing is basically tethered to Instagram. So I think there will be some version of threads that exists, but I don't think it's going to be something that people in news, especially financial news, will be using on a regular basis.
So not a Twitter killer. That's your call.
At this point, it's not a Twitter killer. I mean, unless Twitter continues to make its user experience worse, I don't think it's a Twitter killer. Like Twitter, all it really needs to do is just not get worse. People love TweetDeck, people love Twitter. It sounds like they're going to start charging for TweetDeck at some
Yeah.
point. I have a pretty good sense that a lot of people are going to start paying because there's a lot of value in using tools like that. And, listen, say what you want about, Elon Musk and the politics and all this stuff. And that's fine if people feel that way. But in terms of when it comes to practical use, I really don't see people leaving, Twitter unless the tools are just easier to use somewhere else.
Yeah, my Twitter experience, I feel like, has gone down a little bit, but it's still like so far ahead of the Threads. Like Threads is like way like down here, right? There's nothing. It's bare bones.
I know, but Sam, there's so many like bots. Like every time I tweet, there's like 10 fake versions of me, like trying to get people to send them Bitcoin and stuff like that. You know what I mean? Like, how do we stop that?
And I agree, JC, and I think that's exactly it. I think the reason why some of these competitive platforms are closing the gap with Twitter is not so much because they're offering something that's necessarily better. It's just that Twitter just continues to get worse. So, I mean, and you've seen these bots too. I did a little bit of coding when I was in high school, maybe, but you see how the language that a lot of these bots use. There's all kinds of patterns here that you would think that a really simple piece of software should be able to pick up on and block and ban and all this stuff, but I don't know. They just don't seem to be interested.
Sam, with what developers at Twitter exactly?
Yeah, right.
I like that you mentioned the lack of desktop. For me, that's a big one for sure. What about the politics and all? You think it's a political thing? Maybe people who are leaning more left are just getting pissed off by Elon and just kind of like in spite of him joining, like to kind of express their political beliefs that way. That's not sustainable, right?
Well, I don't know. I mean, a whole bunch of people left Twitter for Truth Social when, all the stuff was happening, during the Trump administration. So,
yeah.
Maybe it is possible that, here's the thing. People who work in the information business, like you, me, people in the news business, like might have to stay on Twitter because it continues to be a pretty good source of information. But if you're not like tied to this professionally, there's really no reason to be on a platform if you feel so disgusted by the politics of the people who run the company. So I think that's sort of maybe what one of the disconnects is when I think about my social media experience versus what a lot of the users of social media are experiencing. Like really, for me, I need something where the tools are really good and I'm able to upload stuff and I can communicate, to the audience. Whereas a lot of people who are just sort of consuming this media, if they see the nature of the content they're consuming slanting in a way that they don't find, very palatable, then yeah, there's nothing stopping them from leaving to a place where it's a little bit more pleasant.
I tell you, if Sam Rowe is bearish this Instagram Threads, like I trust you and I respect your opinion on this way more than my own. So if you're bearish, then I'm probably not bullish.
Listen, here's how I think, you sort of set Instagram Threads up for success, right? And this is really simple economics and business behavior. Start giving some financial incentives to some influencers or some media platforms or whatever to start posting there exclusively. I think one of the biggest hits last week on Threads was, a reporter on Semaphore said that they were going to break news on Threads. And it's like, that's a really great way for, Semaphore to get attention on Threads, but that's also a really great way for Threads to get attention because you have to use this platform to get that piece of information. So, maybe that's the solution that at some point they figure out financial incentives for users on the platform.
Sorry, Spencer. Sorry. I always steal all the questions when
the numbers. That's what I was gonna say. The numbers are going to be skewed. Yes, I want to hear Sam's
So the numbers are skewed because it's so easy to just download the app, connect your IG, and you're done, as opposed to a brand new platform that you have to do everything from scratch. So is it fair to compare the user growth so quickly, like 10 million in an hour or whatever the number, compared to Chat G or like some other platforms throughout history? It's not fair, right?
No, that's complete BS. Like signing up for Threads is the most passive activity on the planet. And I actually posted on Threads about this. That the easy part is getting someone to sign up for your free app. The real test is going to be maintaining that engagement and figuring out how to monetize that audience. Like, okay, sure, 10, 30, whatever number is 100 million people sign up and download the Threads app. The real question is going to be how many of these people are active users in the next week or two, or maybe next month. And I really doubt that these people will continue to be users. I mean, how many social media apps have you downloaded in the last year? Like, I still have
Clubhouse.
Clubhouse. I still
R.I.P.
have half of these. I think I even have Parley. Like, I don't think I ever really even set up an account for half of these things. It's like you use it once or twice, but unless you need to use it, or unless you find the experience extremely valuable, yeah, I mean, thanks for the free app, but I have no incentive to go back to these things.
I agree, and of course they didn't tell anyone this, but they tied it to your Instagram account. Where you want to delete your Threads account? Okay, say bye bye to your Instagram account too. So they've all but ensured that the number of users won't ever fall because people don't want to delete their Instagram accounts.
If Instagram is like your high school friends and like your college friends, like that are sharing pictures, like, do you really want to know what they think? Like, I definitely don't. Like, I don't care. I mean, I love you guys, but like when it comes to the market, the last thing I care about is your thoughts.
That's why I got off Facebook. Yeah.
Right. Exactly. All right. So sorry that we turned this into a Instagram Threads conversation, but if we have Sam Rowe in the house, and this literally just happened a few days ago, like, to not talk about it would be stupid. Let's move on to the markets quick. We've got a new 52-week high in the number of making new 52-week high, right? On an equally weighted basis, consumer discretionary is up 30% since last June. Industrials are up over 30% since last June. Technology is up almost 30%. These are monster returns. We're off to the greatest start for the NASDAQ of all time, right? Best first half to the NASDAQ ever. And yet sell-side analysts continue to remain very pessimistic. You've got your positioning by speculators still incredibly short. So just they missed it coming into the year. They're still on the wrong side. Where's the disconnect, Sam? How does this all pan out?
Yeah, I mean, so there's a couple of things over there. So the sell-side analysts continue to be bearish. I mean, listen, if you're making a call, if you're making a 12-month call and you're at the top of some Wall Street firm, it's very difficult to, 6 months in to completely flip your argument, because then you're probably going to lose a lot of credibility, right? So you have to be anchored into your old positions in one way or another. Like just this morning, I think I saw Barclays, top strategists came out and raised their target from, I forgot what it was. It was like from 3,600 to 4,100. It went from extremely bearish to still bearish. They still expect, prices to go down from here, but it's still the same bearish narrative. And they're not flipping on to go bullish, because again, they still have to, say that, well, our fundamental, thesis is still intact, blah, 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 even though the price is going in the completely opposite direction. And then as far as like speculators and positioning and all this stuff is concerned, I don't know what happens there, but all that tells me is that there's actually still more room for the market to go higher, because, as long as all the sell-side analysts are saying that things are terrible, positioning is still pretty bearish, it's like that's not the kind of things that I would assume you would see at the top of the market.
Sam, you do a great thing in your newsletter where you summarize what you call the macro cross currents, right? The economic cross currents, which I love the word cross currents, because that's exactly what this stuff is. Because like you get contradicting indicate data points all the damn time, and it spins my brain around. Help us make sense of and you do a great job of like summarizing and like what does this all really mean, right? And you do so. Summarize this for us. What are the macro cross currents saying right now?
Yeah. So, listen, I really encourage people, if you're falling behind on what's going on in the economy, I really encourage people to, pick up my Sunday newsletter. It's free, like Instagram Threads, it's totally free, and check it out. And if you don't like it, you can delete your subscription. But, all the cross currents continue to basically say the same sort of balance of information, right? Sentiment, terrible. ISM surveys, business leader surveys, consumer surveys, consumer sentiment, confidence. All these are the sentiment, all like the soft data, right? You ask someone how they feel, you ask someone how they feel about the future, they're all going to tell you that things are not great. The hard data, on the other hand, what people are actually doing, what businesses are doing, are overwhelmingly bullish. Everything is favorable. Like even people are trying to spin report as, oh, big miss, our first disappointing jobs report, in 13 months or whatever. But this is also another consecutive month of job gains, 200,000 plus gains every month since the beginning of 2021. The labor market is extremely strong right now, and that's also confirmed by other measures in the economy like consumer spending and business investment and all these other things that say the economy is growing.
And then
So
Sam,
when you look,
sorry to cut you off quickly. On the jobs front, I'm not an economist, thank the holy Lord. I'm not a fundamental guy either, fortunately. Respectfully to you, are the jobs numbers of all of these lagging indicators? Aren't the jobs a little bit more leading of that stuff?
yeah, well, I think the jobs numbers themselves might be like, and non-farm payroll job creation is probably, arguably a lagging indicator. But one thing that is kind of a leading indicator is job openings. So this is, from the job openings and labor turnover survey that you get. That comes, the report is released 2 or 3 days before the payrolls report that tells us about unemployment. But the figures, come on a 1 month lag. But job openings are an indicator of future hiring. And, we still have 9 million job openings out there, and that amounts to about 1.6 job openings per unemployed person. These are positions that companies and businesses are looking to fill. And the reason why you have positions to fill is because you're probably not able to keep up with the demand of your customers. So that's also an indicator of pent up or excess demand or demand that's not being satisfied in the economy. So so you might not have enough employees to serve all the diners that want to eat at your restaurant, but those people still want to go to your restaurant. They can't go to eat, this month, and they're going to go next month when you do eventually hire an additional server. So job openings, and by the way, these elevated job openings, that's been a story for 2 years. And every month for, at least 2 years, it's been telling us that there's going to be more job gains. So it's kind of crazy to me that people continue to think that, the labor market is going to sour, overnight. And, of course, the Fed and Jerome Powell and all these people want the labor market to be cool. And, the level of job openings has been trending lower. But relative to pre-pandemic levels, it's still extremely high. And it just tells me that, we're going to continue to see months of job gains.
Sam, sector rotation is the lifeblood of a bull market. In the back half of last year, everything was working except for growth and tech. And now this year, the best performers are growth and tech. Back half of this year, do we get sector rotation into other areas? Give me the sector that we should watch. What's going to finish the year the strongest?
So I think you said it in kind of the introduction, but I'm the old school, classically trained, bottoms up fundamentals guy. So I don't know how the sector rotation looks like in the second half. But I think something to keep in mind through all this is that the outlook for earnings growth for across the board in the S&P 500 or the broad market, generally speaking, earnings growth expectations are very favorable for 2024 and even into 2025. Double-digit earnings growth next year and the year following. 2023 is sort of like plateauing out, in terms of earnings growth. But I think from the support from a fundamental perspective means just prices broadly go higher. And keeping in mind that, again, this is not, yes, there's a lot of concentration in stuff like infotech and communications and all that stuff in terms of earnings growth. But every sector in the S&P 500 is expected to see earnings growth next year. And if earnings look promising, in 2024 and 2025, stocks are discounting mechanisms, so that they'll probably.
Yep.
Look, I'm not making a call, but I wouldn't be surprised if prices continue to move higher.
I love when Sam talks to me about discounting mechanisms. Last question: best Korean restaurant in New York City. Go.
Oh, best Korean restaurant in New York City. I would say it's Cody or Cote.
Yeah.
I actually don't know how to pronounce it. I don't know if you guys have been there.
No,
I have.
Some people are going as far as to say that it might be the best steakhouse in New York, which is sacrilege to a lot of people. But
I've been there a couple of times. It's good. It's legit. You got JC approval. Great wine list too, by the way.
Yeah, great wine list, great drinks list, appetizers, service, everything is spot
They're
on.
opening more around the world. They keep opening more. I don't know if you noticed.
Yeah, I think they've got one in Miami, and yeah, they're expanding. But yeah, whatever they're doing, they're doing it right. And as a Korean person, I can tell you this is not some sort of like flashy Soho restaurant where it's like, oh, the portions are like this small or whatever. This is real Korean food that they're serving over there.
Okay, but
they're
this
just
is
like
fancy. But Sam, this is a fancy place, and we got to let you go because Kimmy's here. But this is a fancy place. Give me a dumpy place. What's the best dumpy place?
A dumpy. Listen, if you go to 32nd Street, between Fifth Avenue and Broadway, on that ground floor. Literally every Korean restaurant on 32nd Street between 5th and Broadway is good. You're going to see lines out of some of them. You're going to see some that don't have lines. Go to the ones that don't have lines. The food is going to be just as good there.
I want to mention I live in Fort Lee, New Jersey, which has a tremendous Asian population, and we have Asian restaurants on every block, and it's fantastic.
We gotta have Sam back on soon.
Wait,
great,
Sam, last question. Earnings season starts Friday. Scale 1 to 10. How excited are you?
Oh, I could not be more excited about this. So, sign up for the TKer newsletter where you can read about my excitement every Sunday.
All right.
Nerd alert.
I'm also pumped. It's game day. Guys, Sam's newsletter, TKer, TKer.co. It's on the screen. People just signed up already during the segment. Sam, thanks a lot, man. Have a good one.
Awesome to be here. Take care, guys.
Adios, Sam. Thanks for coming, buddy.
All right, guys. Kimmy is like JC having problems today. I don't know what's going on in the Restream servers, but JC obviously is on audio only because his video feed is horrendous. And Kimmy,
are we back? Are we better now, or are we still struggling?
Holy crap, you look good. And Kimmy can't even get in.
Kimmy can't even get in.
Can't even get in.
I was a little disappointed because I was actually really looking forward to asking Kimmy because last week was kind of like a dead week, holiday and slow, and I want to see, the big boys are back, right?
Kimmy is locked out. She's getting some firewall error. I don't even know what that means. I have to figure that out after the show. I don't know.
Well, either way, Kimmy's got to go trade. So why don't you tell the folks where they can go follow her to go trade with her?
Yeah, guys. If you go on YouTube, in the description of this video, there's a link there. It's the third link from the top. I'll also put the QR code on the screen if you want to join Kimmy's room. She's there every single day at the open, through the open and beyond, live trading, announcing her trades, winners all the time. She's a tremendous pro, and it's a premium service. If you want to get into her room, you have to go to that link. It is not free. It is not for everyone. It is exclusive, but it is freaking awesome. So there's the link to her room, QR code on the screen.
Can I do my Kimmy impression?
All right, she's not here.
I just need to see. I just need to see how the market trades. The boys they're back now. Last week was a slow week. It was a holiday. I just need to see how the market trades. I'm looking at this Halliburton. If it can hold the 200-day moving average.
No, Alibaba.
Out above no, she's looking at Halliburton.
Oh, I thought this is like a general impression.
Oh, no. Yeah, funny. I'm looking at Alibaba. She looks at Alibaba more than anybody I know. No, she's actually legitimately looking at Halliburton. Halliburton, if it holds. By the way, I love the fact that she's focused on energy stocks.
I don't know if I've looked at Halliburton in like 2 years.
Well, you should, because oil services have by far and away been the best performers in energy. So
look at that Friday it had. Dear Lord.
Hello. Yeah.
All right.
So if Halliburton, she says if it can hold above 34.5, there's potential to 39. I just need to see how it trades, JC. I just need to see how the market trades. We got to be careful in this market.
That was good enough. We'll have to do Shelly with some advice for me. Thank you, Shelly. We'll figure it out later. Sorry, everyone. Tried to get Kimmy on for like the last 10 minutes or more, and wasn't in the cards today. But hey, at least you got JC's mug to look at, which is something.
They rather look at her, Spencer. They rather look at her.
I know. Okay. So I had like 4 things to talk about. Oh yeah. Did you see this NASDAQ rebalance thing?
What NASDAQ rebalance thing?
Okay. Friday at 8 p.m. Literally Friday at 8 p.m. NASDAQ drops a press release saying the NASDAQ 100 index will do a special rebalance. The index normally rebalances in like December, the end of the year. They're going to do a special rebalance that's effective July 24th to address over-concentration by redistributing the weights. But they didn't say how they're going to rebalance it. So I have no freaking clue what that really means. I assume it means they're going to make the top weightings smaller and make it slightly more equal weight. I'm not quite sure. But anyway, something to keep on your radar for a couple weeks from now.
And just so everybody knows just how obnoxious the NASDAQ is, because, there are people out there, Spencer, that are so ignorant that they think that the NASDAQ is the stock market. And I'm not saying this like offensively. It's just ignorance. Like they haven't taken the time to see what's actually in the NASDAQ, that they still think that the NASDAQ's the stock market. I think it's important to really understand what's in these indexes. For the record, in the NASDAQ 100, it is 51% technology. I'm going to say that again. The NASDAQ 100 is 51% technology. And by the way, in that technology, that does not include Google or Meta, because neither one of those are technology stocks. Those are in the communication sector. Tesla and Amazon, again, not technology stocks. Those are consumer discretionary. So you have 51% technology, and that does not even include Tesla, Amazon, Meta, and Google, because none of those are in the tech sector. Just to show you just how much exposure to those mega cap growth stocks are in the NASDAQ 100. For the record, the NASDAQ is not the market. You know how much exposure the NASDAQ 100 has to financials? 0%. You know how much the NASDAQ 100 has exposure to energy? 0%. You know how much basic materials it has? 0%. You know how much real estate it has? 0%. So
no, real estate. Yeah, that's correct.
Are you gonna question me, Spencer? Is that what's happening here?
No.
You want to talk?
I'm looking at the chart right now. They've got 1% utilities. What else do they have?
They have 4% industrials.
Yes, 4% industrials.
So might as well be 0.
5.5% healthcare. But it's healthcare tech, right? So
yeah, exactly. Right.
Yeah. Anyway, also weirdly enough, the what is that? The 8th, 9th, 10th largest holding is Pepsi. Weird. But anyway, the top 2 holdings are Microsoft and Apple, and that is about 25% of the fund or of the index / QQQ. So I'm just speculating here. I have no idea what they're going to do. I would assume they would lower those weightings, but we'll find out in a couple weeks. Maybe they'll.
That was a good call out on the changing of the weightings. Nice one there.
Friday at 8 p.m. JC, who is at their computer?
You apparently you.
Not me. I didn't see it till this morning. I didn't see it till this morning. So no, I did not see this over the weekend. Doing other things. But anyway, we'll have to come back to this in a couple weeks. Maybe.
What do you say? What did we say? We do a little hot corner, huh?
Yeah. We got some hot corner things going on.
Do it.
Where's my hot corner bumper?
Hot corner. So hot right now.
Another relatively quiet day in hot corner land. Let's bring the table up on the screen here. 2 transactions and what's that? 5 unusual option activities to make note of. Domo was the larger, I think, of the 2 Wait, go back to the table. I was reading that. Thank you. The larger of the two insider buys, and then Axum Therapeutics, AXSM was the other one. I know we have charts for all of these.
AXSM, that's an interesting one. Fairmount Fund Management filing a 13G. So filing a 13G, making them a passive investor versus something like a 13D, something like Carl Icahn usually files, making him an activist shareholder, meaning he wants to make changes. These guys over at Fairmount, they're not trying to change anything. They seem to like what management is doing. Certainly, this thing has only been publicly traded for 7 years. Relative to nice base over the last few years. Going, but worth the reason why Spencer. People are like, JC, who cares what this management company is doing? They have different objectives than you do. I don't care what they're, I have my strategy. That's fine. All that we're doing by.
We lost JC. We'll get him back. What I was going to say about the 13G is I love the implication of a 13G, right? Because a 13D is an active stake. That's like someone saying, yeah, I'm going to buy your stock, but also I know better than you, management team, and do what I say or else. 13G is like, nah, you guys are great. Keep doing what you're doing. We love you. We bought your stock. Maybe we'll buy more, but keep on keeping on. It's a much more positive implication, right? The 13G versus the 13D is all like, maybe we'll demand management changes, or we'll call for try to get our guys on the board, or whatever, this and that, or call for strategic alternatives. I don't know, whatever. 13G is just like, nope, you guys are great. We love you. Keep on keeping on. So AXSM, as we get JC back here, AXSM was one. We had Domo was the other. Let's rip through these quickly. And then I want to highlight the TAL. That was very interesting. We had unusual options in Tall Education Group, right? I don't know if I've ever seen unusual options not that I follow the stock very closely, but this is a space that essentially got decimated. I'm amazed that the stock is even still around, frankly, because of what the Chinese government did to the online education industry in their country. There was a number of these stocks, right? There was TAL. I don't even remember the other ones anymore. TAL was the largest one. This was a $90 stock 2 years ago, 2.5 years. $90. It is now $6, right? So that says everything right there. Interesting. JC now having the same firewall problem as Kimmy. But why am I not having that problem? Should we do some live on the fly tech support? Maybe I'll talk to you guys and do live firewall tech support here, because it'd be a shame if we had to end this so early. That'd really be a bummer. I'd love to get JC back here. Let's see if we can do this real fast. I don't know. JC's a smart guy. Maybe he'll figure it out. Maybe he won't. When are we interviewing Bart again? I don't know, Joe. I don't know. Soon? Maybe. While JC figures this out, maybe we will end early. I did want to mention the chart report briefly, if only because we are doing another webinar. No, not webinar. Live event. That's what we'll call it. A live event this week, Wednesday. If you missed our last one, it was 2 weeks ago. We did it during the middle of the day. We're doing this next one Wednesday in the evening. Wednesday at 7 p.m. We're doing a webinar with myself, or a live event with myself and Patrick Donawilla from the Chart Report. We're going to go over our new scan called the Buzz, how it can give you trade ideas and how you can use it to make money, right? So I just dropped the link in the chat, totally free, right? If you can't attend, that's fine. Sign up anyway. You'll get the recording when it's done. It's going to be a half hour, just me and Pat going through the scan, how it works, why we do it, and again, how you can use it to find ideas and make money. Totally free, Wednesday, 7 p.m. Eastern time. And I just put the link there in the chat for you. I'll pin it to the top of the chat right now so you can maybe hopefully it doesn't get lost in there. There we go. Okay, so yeah, we're having some firewall issues with Restream today. Not sure what's happening there. I'll have to fix this for tomorrow's show. So I want to mention the buzz in the webinar we're doing on Wednesday. I mentioned Wall Street to All Streets already. What else did I want to mention? No more programming today. We're not doing the Flow Show or anything like that. Sean and Strazza obviously are they're 12 hours ahead of us, so it's like 9:30 for them. So they're not going to do a show at like 3 a.m. their time. So that's it for the channel today. We'll be back tomorrow. We have the morning show. We'll be doing Spaces. We'll be doing CRL, Chart Request Live. If you have any questions for Chart Request Live, any requests for us, email us now. Get ahead of the game because we cannot get to every request in the chat. There's always just too many. If you email us, you will cut to the front of the line. Questions@stockmarketmedia.com. Okay, I'll put it on the screen there. Questions, where is it? Questions@stockmarketmedia.com. Email us for CRL. Get to the front of the line there. What else did I have? I think that was all I had to just like promote things going around the universe. Chart Request Live, Chart Report, documentary. We got that already. Wall Street to All Streets. I think that was it. Okay, JC I think he is officially given up on joining the show, which means I will have to end the show because you don't want to listen to me blabber for a half hour. I have nothing even, which is a shame. I had things to talk about with JC. I wanted to talk about Kura Sushi. We'll have to do it tomorrow. Yeah, Kura, and what else is on my list? Carl Icahn stock is moving today. I want to discuss that. I guess that was it. Not that much else on my radar. Whatever. You know what this means? We'll have more for tomorrow's show. That's what this means. So, that being said, Wavy's saying stay and what? Just hang out with you guys? I guess I could. Market very mixed. That's positive. Seeing some green on my screen for the first time in a couple of days. That's nice. That TAL we just mentioned, holy shit. That TAL just popped off the open there. Another 2%. So, okay, that's notable. What else do we have here? As we approach 9:40, Meta's having a good day. Meta looking nice off the open, up 2%. Maybe off those somewhat juiced Threads numbers. I don't know. Big divergence there between Meta and the rest of the fangs, right? Amazon, Google, Microsoft, Apple, all down. Meta going in the complete other direction. That's notable to me. Nothing else really sticking out, right? Just that Meta divergence. Everything else is really, really too soon to tell. Home builders looking strong. Semi is looking strong. Yeah. You guys seeing anything interesting? Do recess. Maybe I should do recess. Small cap industrials, Wavy. God damn it. I owned the what is it? The PSCI? Is that the small cap industrials thing? I bought that thing. God, it's so stupid. I bought this thing like, I don't know, either end of 20 or early 21, like right around the high, right? And I sold it in December. I was doing some tax loss harvesting, and I was like, it's been 2 years at this point. I'm done, and I'm an idiot because it's making new highs right now. So should have done that. Oops, that was a mistake. Yeah. I know Strazza likes tall education. Disney guys, like, you gotta know the difference between a trade and an investment. Like, Disney for me is an investment. I don't sweat it. I really don't. First off, it's like, I don't know, 1.5% of my portfolio, so like nothing. But I bought it intending to hold it for a long time. So like I think I'm down like 30%. Like, not kidding, in this Disney. But like, that's okay for me. It's not a trade. Trades are trades, investments are investments. So I don't sweat this. I really don't. So yeah, That's my Disney take. You know what's doing well, and then I'll wrap up after this. Is my Mattel. You guys see my Mattel? Got some positive income over the weekend. Was it in Bloomberg? Barbie getting some positive reviews. Mattel up above $20. We're looking strong. Guys, I warned you. Barbie, hit of the summer. Mattel looking strong. So, you heard it here. That's all I have to say about that. Shelly's right. Yes, I am much more of a mental mental stop person than a hard stop person. Although I should probably do more hard stops because mental stops don't always work. Whatever. All right. I guess I'll wrap it up here. No more. JC's gone, and that it's fine. We'll just go until maybe we'll go longer tomorrow to make up for today. I don't know. We'll figure it out. Guys, thanks for watching. Smash the like if you're watching on YouTube. I'd appreciate that. The likes do help us. Thank you to our guest, Sam Rowe. Guys, Sam is like freaking amazing. If you don't get at least the free version of TKer, his analysis, like some guys just have really good analysis. Some guys are just smarter than me. Sam Rowe is so much smarter than me. TKer, I get it. It's fantastic. His insights are really, really good. So at the very least, get the free version. It's tker.co. It's on the screen there. And you will not regret that. So that's all I have to say about that. Everyone have a great rest of your day. I will see you tomorrow, right back here for the morning show. That's it. Bye, everyone. How do I end the show? Where's my see, Restream keeps changing things around on me. All right. Now goodbye.
I can't take no loss. I don't even know what it costs.